Hello guys, glad to have you on board again today. I'm sorry for the late posting of that video, but we had to handle a very tough session and I just gave priority to prices and trading. So we couldn't make it ahead of the intraday session. We were supposed to make an intraday market forecast today. So obviously I'm not going to make intraday forecast after the battle, but all we're going to do is basically reviewing this battle because I just took a kind of a loss today. One of the big rare losses I can take. Just took a minus 2.75% net on the account, just on a DAX trade. The account itself is kind of in the balance right now, barely at the prices. It's been barely at the balance, even though the fact that early morning the opening of the account today was plus 4%. So I just lost those 4%, which is kind of a drop. Generally don't have swings of 4% up and down in a single day. So it's kind of an 8% move. 4% to the positive side and 4% to the negative side on the accounts. Kind of hell of a swing in an intraday basis. So those days are rare. And I've been kind of shaken off myself as well. But all that matters is that for some reasons today is not a bad day, it's not a red day, at least not for now. We'll see how it goes through time. It's pretty damn hard to tell at that stage. So we're going to cover up the swing major things that we have in here. And just to set things straight, today is obviously a big mess in trading. We had pretty nice opening on the euro dollar. So let's have a look at all the intraday trades. Look at the euro dollar, V-sharp reversal. Same thing goes for GBP. What the hell's been going on today? It's like the market just decided to fuck it up entirely everywhere. Kind of a very dangerous risk management. Feel like robots were trading today and they just fucked up every human being in there. Me included. So yes, I thought we were good to be kind of validating euro dollar and GBP dollar. Kind of right now, nothing is for sure. We kind of fucking range trading again. If you have a look at this in a daily chart perspective, what does it look like? It was a bullish candle. We broke previous day's high. We're still below previous day's low. Still looks like a positive day, but it's nonsense. We're building a fucking triangle. The momentum isn't confirming anything like that. Generally, when you have this, you're going to have a squeezing in momentum, which we don't. So why are we taking so much time to work out this area? Moreover, that to me, we're trading that triangle with a bullish perspective, but the market feels like it wants to do the opposite side. So we'll see how it goes. We're in support area. We were supposed to buy that price, but the market doesn't want to. So believe me, and you should get that lesson as fast as you can. You're not fighting the market. Even if all odds suggest that we should have bullish reactivation, if you're trading bullish and the market goes bearish, just let it go. It's what we call a risk management. We've got lots of clusters suggesting the price may go lower, so if you cannot accept the price to go there, then you should get the hell out. Because to me, we can very well go there. I still have my risk management accepting this possibility. Same thing goes for GBP/USD. We've been forecasting the high probability to go chasing down below the lows. This is what we're doing right now. We've got absolutely no signs of momentum. The momentum is absolutely no bullish, no bearish. It's just a fucking momentum to fuck up all speculators in here. So we're going up or down depending on how the liquidity is playing. Today we've been breaking both the previous day's highs, previous day's low, and we are currently trading inside the previous day's candle. So it's you know what? You're buying, let's fuck you up. You're trying to sell, let's fuck you up as well. And we'll see how it goes afterwards. So that's basically what today's session has been about. Fucking everything up and see where it's going to go in the next few days. So that's how I'll sum up those informations, to be honest. So yes, I would say low risk must be must be at play right now. Don't put too much leverage because the market itself, I think, doesn't know where to go. It's just going to play against you, which means you and me included, retail traders, the market makers will look out for your trades and basically do the opposite. If we're too much buying, too much selling, they just do it the wrong way. So when the market doesn't know where to go, it generally takes the wrong foot of speculators. And in that perspective, as a speculator myself, risk management is what puts me in safe area, and not of those who are going to be hunted down every day by day, but just those who will make gains when the market is technical and suffer losses, but tiny losses when the market isn't. And obviously today the market was out of any technical. It's just market makers versus you, and obviously market makers always wins. But there are still some it's not just black or white in terms of trading. It's always shaded grays. So today some things have been doing well. EURJPY is performing pretty well. USD JPY as well. NZD yen is doing great. CAD yen is doing very great. USD CNH kind of balanced. USD MXN still trying to fuck up stop losses. Been buying USD 3. Been taking huge gains today. It's kind of balancing. But on the opposite side, AUDNZD is fucking up all the stop losses as well. So we're very well going on the opposite side in here. I don't know what's happening. We've got a momentum signal happening just right here, right now. So we're over. Oh, damn it. We're overloading momentum, so we're kind of having a problem. Yes, we're trading at technical levels. We shouldn't be that low, but the market decides to go there anyway. We're overloaded. Let's see how far this can go. Let's count down how many days down are we for now. 1, 2, 3, 4, 5, 6, 7. So it's just another couple days of down days to terminate that trend. As generally in trend, we're trading 8 to 12 days. So I would say 8 days in here could be probably what we're looking for. It's going to be the final wave to me because in the current comp we have makes first drop. Remember that if you want to use Elliott wave strategy, the easiest possible way, just count down for waves. In ranges, you want to see 1, 2, 3, 4 dips, okay? With a retracement at each time and a new low, which means those lows in here doesn't count. They didn't manage to go as low as those ones. So first dip, second dip, third one, fourth one to come. So just let it go for a few days, and I think we'll be mature to buy AUDNZD. Don't forget that we've got major catalysts during the night. So we'll see how it goes. We can eventually gap up right here tomorrow. The thing is that I don't want to anticipate any of this ahead of the market catalyst. I still have buying entries in here, so I'm not going to reinforce without further information, especially not ahead of a big catalyst. We're expecting GDP during the night, so it can be a real big game changer. All right. So yes, today let's sum this up in a single sentence. It's a mess. Everywhere. It's a mess on forex, it's a mess on equities, it's a mess on gold, silver, US oil as well. I've been taking partial profit taking right at the market top, and we're raising all those gains all along the session as well. So yes, big mess everywhere. The market is lost. And generally when that's the case, the market will tend to create ranges. So are we already at the top of the range on US oil? That's a possibility. Anyway, I've been locking on 1/3 of my gains that I bought at the low. So 1/3 is out. Still have 2/3 in, which means I'll be pretty happy to see this nasty candle invalidated tomorrow and going ahead and top of this scalp session. So I would like to see not aggressive sellers holding that market, but more likely fucking them up to go at least searching for average pricing, which is 50% of the trend channel. And that's how we'll have kind of a sense that the market wants to neutralize the bearishness. As so far, if bears are handling the reversal in here, means the bears are still very aggressive and they don't fear anything like a pullback. All right? Remember, this is just a taking profit structure, and even though how stupid this was, going from overbought to oversold for more than 40 sessions, it's quite unusual. It's rarely happening. But yes, we could still have some very aggressive bears, even though that makes no sense. We're not here to give sense to the market, just to trade risk ratios into interesting prices area. So what else? Yes, General Electric's falling apart. still following the same things, so probably about to fuck it up again. So we're making new bearish engulfing in here. So we'll see how today's candle close. But we've already broke through previous day's lows. So the only uncertainty at that stage is either we're going to retrace or close below previous day's low. So it's going to give another signal to go even lower than that, which means the profit-taking structure we have in here seems to be not enough to hold on to those markets. So General Electric seems like a falling knife, and still is apparently. I still expect us to, we had multiple options. So either today is the lowest day we're going to ever make on General Electrics this month, and we're going to just rise out of it, and we're going to invalidate previous month, or we're going to fall apart in a final bursting move, probably lower shadow candle in a monthly basis to terminate the crash early or late December, then retrace, and probably going to have a Monday, January, a positive. But that's the way I'm forecasting this to be. So patiently waiting for this to play its game. We're oversold in a monthly chart the way we've never been in the past. Even though those previous bearish candles are nothing compared to what we're living right now. In General Electrics, knowing the fact that we've already broke previous highs, so it shouldn't be breaking those lows. So we should expect kind of a dip structure making out there, but with a higher low than this one. So it gives us pretty much room because the previous low is below 4, so it still needs between 7 and 4. There is lots of room to work with, but we should expect a dip structure to come at play in the next few days and weeks. VIX and VXN obviously rising again, but we are not yet breaking resistance either. So that was to be expected to have some kind of sharp reversal. This is what we're having. I expected it to be a little bit lower. Once again, the market just wants to fuck me up because everything that happened today was part of the plan. But before we get to put this plan in motion, I was expecting slightly better prices on the SPX, slightly better prices on the Dow Jones, slightly better prices on the German index to sell those indexes, but instead of that, I got caught in that strong reversal today on the DAX, which we're going to terminate the show with it. We're going to make just a quick talk about the cryptocurrencies because I should have done that already, but I didn't. So same thing goes here in here as well. Kind of building a dip structure, at least a structure that tries to make a dip. We're oversold in a range, so beware. We're possibly trading some possible range structure support, range support, and it will be 2 waves up, 2 waves down. So really be cautious. If we hold on to those lows, you can expect 2 bullish waves to play their games as well. But this way, as this will be final range structure, it's going to be just take this, okay? If you take first bullish range, second bullish range wave, generally the third one is the one that has the steeper pace. So if we're about to go there, you can expect the momentum to be more aggressively bullish. But that doesn't mean the market is going to be bullish at all. It just says this is to me where the range top is, because we've been breaking in between in here. This is where the breakout happened. So as we made lows in here, I suggest highs are in here with the middle level in here. So I suggest we should have more bullishness before getting into eventually managing the risks to those who've been buying those lows. So the buying entries I've made at the lows, I want to secure them partially, but I want to do that in approximately 5,700 and nothing below those prices. Otherwise, I just let it go, and if prices wants to go below 2,900, all I'll do is let them go and buy the final layer of entry I wanted to make, and afterwards no longer talking about fucking bitcoins for 2 years, or at least not until they manage to get up to resistances. So let's get to talk about the DAX and the mistake I made that led me to that nasty 2.75% loss today. So yes, it wasn't expected first, because generally you don't expect to take a loss, otherwise that's not how it goes. So let's have a look at the technicals in here. 2-hour chart is just a freaking mess. That's what we call the momentum shakeout, when we go from overbought to oversold in a straight line, so which means less than 10 bars to go from overbought to oversold. And we're not doing tiny overbought and tiny oversold. We've got up to 100 and going back to minus 100 in just 11 sessions. So yes, that's great. That's how brutal we are right now in terms of equity pricings. Sorry about that. So what does that mean? Generally means the market has absolutely no clue about where what it's doing. Does it mean we're reversing? Obviously not. Does it mean we're trending? Obviously not. Does it mean something? Absolutely not. So it means nothing. Everybody who's trying to figure out what the hell the market is doing is just going to be wrong, because the market itself doesn't know what to do. So it does what it does best in those conditions. It fuck ups the bulls and it fuck ups the bears. It fuck ups everyone, and then tries to see where the liquidity leads us afterwards. So we're kind of banging each boundaries up and down until we figure out to find a solution, which means until we figure out to find some money, smart money to play with, which means at the current stage probably smart money is doing nothing and is just patiently waiting for every speculators, me included, to get totally fucked up. So it's us versus market makers. It's the speculators versus the market maker, and I've always been clear with that. When we're trading, you're generally making money because you're taking a less stupid decision than someone else. Doesn't mean you're taking smart decision yourself, because we don't know. We're no smart money. We don't have access to the liquidity in terms of precision. We're just here to figure out what the odds are for the liquidity to go there or there. That's all we do, okay? Of course, the market maker has better information than you will ever have, because it knows how many clients wants to buy, how many clients wants to sell, at which prices, and moreover, they know where the stop losses are, which you never have access to. And that information itself gives them a pretty decent edge that they're going to use against you, because if the only persons who are trading at a current time are you and the market makers, guess who's going to be someone else's bitch? You're going to be the market maker's dumbs, because that's how it is. The market maker is, no matter how, no matter what, going to take smarter decisions than you, because they have further information than you do have. So yes, they will always beat you, always. And that's what makes you a loser at some point, because when you speculate, you never know who's trading, okay? But generally, I try with my strategy to take advantage of what the institutionals are doing. This is what the indicators are trying to figure out. If they're buying or selling, and you're trying to get there in the market where the institutionals are apparently are supposed to trade, in risk management areas. But apparently, at some points, these institutionals are just not trading. And when you're trading just all by yourself versus the market maker, you're going to be the market maker's bitch. And obviously they're going to fuck you up no matter how, no matter what. You're trading technicals, the market maker is trading liquidity. And it can do whatever it wants with liquidity, which means it's going to bring you up and down and give you, it's going to make you fancy buying or fancy selling just to fuck you up, because he doesn't care about technical, or it's generally algorithms in here at play tonight or today and nowadays. Sorry about that. So you just can't fight it. It's faster than you, has deeper information, so obviously it will beat you. So today is probably a market maker who beat the ass out of me and took my money. But what I care to survive in trading is when this happens, they do not take a lot out of my ass. And when it works just fine, I take more money out of someone else's ass. The thing is that today I came to a 2.75 fucking loss out of a multiplicity of tiny mistakes. Because me, like you, I'm no magician, I'm no perfect person, I make mistake still today and always will do. The thing is that I do far less mistakes right now than I did in the past, but the thing is that today when I make mistake that ends up to a big loss, a maximum drop down kind of loss, like it happened today, it's generally not going to be a big mistake. I don't generally do those kinds of ones. I still do from time to time, but not here. What I did here is an accumulation of tiny mistakes, and I'm going to review them just for transparency purposes, so you'll see how it goes when a professional takes a big loss. It generally means we're no magician, and as well we're doing stupid mistakes. What I did basically is trading in here today. Respected the strategy, got an oversold momentum and a profit-taking structure. So I didn't took hell of a position sizing in here, as it was just a taking profit pattern. Same thing, I've been playing in 2-minute chart. I've been buying in here to be precise. So I've been buying right in here the 2-minute signal, taking profit as well. So no big money at play in here. Been waiting for the price to reach out to the trend channel to manage my risk and place a stop loss. Problem is the market fucked me up before doing it. Means it tried, reversed, and bang, this is where the S&P 500 has been squeezing down. So let's have a look at what this was. Just look at this, okay? Right in here, S&P 500 preparing for the drop, squeezing momentum, and bang, triggering the stop hunting. And obviously, we were already oversold on the German index, but the German index would never have had to do it otherwise. I mean, when Wall Street is chasing stop losses, obviously the German index will do as well. So this is what triggered my stop losses as well. But the problem is, only this entry really didn't take me that much of money. In here, I took a 1% loss with those entries. Okay, and it's not that big of a deal, and I took quite some risk in here. It's a 1% loss out of a 0.4, so yes, I was approximately leveraged 2 in here, which is obviously, if we made 1% off move, I would have taken 2% gain. So I took a risk, but I didn't take stupid risk. I took risk for a decent gain on the opposite thing. What got me absolutely wrong in here into a minus 2.75% loss is the fact that I've been making an even dumber mistake a day before. What I done is basically, let's switch to 15-minute time frame. When we were gapping up the other days, I forecasting, okay, I'm going to make a trend following trade. Okay, so what I've done is basically right after the gap, let's switch back to there. All right. So right after we gapped up, I decided to catch up with the buying entries. I've been buying those signals, were great. Exit signal, sine wave target, out of what I was forecasting to be a range. So back then I took a range bottom speculative entry and just let it go. The market decided to go lower. I said, okay, no worries, I'm going to let it go. No problem with that. But obviously, if we still don't find the range bottom by the end of the day, I'll get out anyway at 10 p.m. local time frame where the Euro session terminates. I don't want to keep an overnight trade in that situation if we still can't find the bottom. And problem, I've just forgot about that entirely. I was occupied somewhere else making a live show talking about crypto, and I saw the alert, but I just squeezed it on my phone and went to something else and kept following the show. And the problem is, instead of gapping up the day right after, we've been gapping down. So it's been changing from a range trade to a, god damn it, please offer me a pullback so I can buy again and get the hell out at break even and just erase that loss. The problem is, I've been waiting all day long today to get to the actual entry I managed to make up here, or down here. So what I had is basically shitty trade in here that should have got the fuck out in here, that didn't, in which I added a second speculative position. Back then my average entry price was in here. I just needed a tiny pullback, just try to get to that resistance and I would have secured the trade. The problem is, the market makers decided it otherwise. They fucked me up without even giving me a chance to secure the gain. Not even securing the reinforcement was optional. They just fucked me right away. No retracement. In here, momentum squeezing on the SPX triggering the sell-off, and obviously my stop loss got hunted down right in here with a leverage because I had tiny position sizing in here, but I had average prices, god damn it, let me get the hell, average prices in here, so not that good. But I still was expecting to get a gain out of this actually, because in normal markets, I generally do this and I have no problem with that. But rarely this kind of thing happened. And as you can see, I've been triggering, I don't know exactly what prices have been triggered, but it's approximately here. I had, yes, something like that. I had 2.75 approximate leverage. So yes, I basically got out with a minus 1% on the average price. But I don't exactly remember what it was, but it's when we squeezed the SPX that obviously my stop losses got taken down by the markets. And that's a logic loss. It's illogic some way because The markets should have offered me some risk management opportunities, but it just decided to go down straight line without retracement. The problem is the market isn't supposed to act like that. It's not how it goes. Normally you don't do double trending in a row. Remember what I teach you guys. When we do first trending, generally we do trend, then we range, and eventually we go trend again. What we absolutely didn't do in here, we just trended and trended once again. So it's two trends in a row. What does that tell you? We're fucking ranging. When you have two trendy moves, one on top of each other with a tiny range but flat consolidation range, it's even worse than a flat in here. It's a dynamic consolidation range that we had at play. And the thing is that having this, you see two trends, so two bearish impulsions. No matter how bearish this looks like, it's not going to work out that way. So we're ranging. You just need to figure out what the range boundaries actually are. So you just get the hell to zoom out, and this is where you actually get the information. What are we doing right now? We're ranging 15 minutes, pure and simple. Okay, so how did I get it? Did I manage myself to get caught in there? It's stupid. Obviously, I just bought stupid prices, especially this one, which means I tried to bullish trend trade out of a bigger range that happened to be an even bigger range. So I tried to trade bullish trend on 2-minute chart. I should have got the fuck out of this trade, but didn't. This is what caused me big loss today. Without that trade, probably just a 1% loss today, and even probably less than that. So this is where the big problem had been. I have no regret taking the second position entry in here. It really was a perfect entry facing the strategy expectations. So I just respected all the rules in here. But the problem is, right here, I was still... So let's figure out what brought me to that loss in terms of psychology. Let's use the replay function, because now that you see what's been happening, you say, okay, it's stupid, you should never have bought. Now, let's see how it goes when you trade that real time. Do you see range structure in here? No, it's fucking trending. So when you see this, you're playing with a trend strategy. Okay, which means in here, you try to catch up with pullbacks in the 2-minute chart time frame, which I exactly did. Let's replay this. Let's do, oh, jeez, this is not what I wanted. All right, let's do it again. Let's replay, okay? You're opening the cash session in here. You're at play, okay? Nothing to do. Sorry, let's just let the info. So you're extreme pricing, and this is where I made the mistake. This is why I made you guys the update, actually. I should never have taken my trade, because we were extreme pricing. Okay, so just let go. No buying, no buying, no buying. You wait for the range to build up. Okay, you need 2 waves down. So it was first signal, second signal, but it has to go lower than the first one. All right, there we've got something that looks like something to play with, but we still have no bullish signal. I'm just looking at momentum right here, right now. Okay, first signal, but where does it happen? Absolutely not as a signal. So what we want is in here for $180. The prices have been buying. You want to buy at a range target. Okay, remember that in ranges you buy the breakout targets. So now everything highlights this area. The profit-taking structure is not enough to buy a range unless you are at the target. Squeezing momentum, that's interesting. You're waiting for the range. Okay, perfect. This is exactly what I'm looking for. In here is where I got the other triggered. It says, okay, we're trading very interesting prices. Problem, extreme fucking pricing. So right now, I see that I should never have got myself into taking that trade. Okay, and this is where the signal got in. Okay, exit signal, perfect entry point. But back then I was really confident the market will make history, will make new highs afterwards. I was targeting 11,600, which is where I would have caught a bearish entry out of a divergent structure on 15 minute. Okay, so obviously this is the kind of trade you should have taken using the strategy, trading at a technical level, right at the perfect range bottom strategy. So you were waiting for that bullish impulse to digest, for a consolidation range to build up, and you were expecting another 15-minute bounce to go search for divergence. When you're trend trading, you generally push prices to divergence. Okay, so I was looking out for a 15-minute divergence. Okay, I was looking at the momentum in here to just digest. So in here it was buying. We were oversold in 15 minutes. So it was buying to push for divergence and sell. That was all about my plan. No more, no less. Buying in here to sell again. This is why this position sizing was very low. This position was low. Actually, it was leveraged below 1, obviously. And I was waiting for this. So range trade out of a pullback in trend. So I was kind of trend trading back then. First mistake. I figured out that mistake when the market broke to lower lows. I said, okay, we're no longer trend trading on 15-minute. We're consolidating. So I'm waiting for a 15-minute range. So what did I do? I took, once again, my 15-minute chart. Let me gather it. Okay. And I said, next time, I'm buying on 15-minute signal. So I'm looking out for this. Okay. Oh, shit. Sorry about that. So I was just waiting for a 15-minute signal, another 15-minute signal. So I said, okay, we'll probably catch up. We'll probably have the range bottom. So I'm just waiting for this to play its game and to retrace. Okay, so step by step, I just let it go. Nothing to worry about. I was expecting, okay, I try to catch this trade on a range trade. The market proves me wrong. Go find for a 15-minute bottoming range. Doesn't work as well. Oh, it was working at that stage. No worries to me. The problem is in here I should have got the fuck out of here because it was 10 p.m. What was part of the plan. I should have taken that tiny loss, which I didn't. Problem the day right after. Bearish gap opening. So what do? You're opening at a sine wave target. Normally in here you don't fear. The market will just try to digest in here, catch up with the trend, and normally we should reactivate the trend. We're still trending at that stage. We're just going to be a dip retracement out of here, and you have 2 bearish impulses, so nothing you should be really worried about. You just let go. The market is digesting pretty well. We're retracing, testing back Fibonacci level, so I would expect this market to just go search for a technical area and buying. You cannot buy in here, you just got momentum. You got no sine wave confirmation, so you're waiting for something to happen, and generally you highlight this area. Okay, this area, interesting to buy, oversold. So you try to catch up on this one. I took that trade on an intraday basis actually. Okay, in here you try to trend trade, so you're still trend bullish trading after a 2-minute retracement. Damn it, momentum squeezing. What the hell's going on? Okay, and this is where it goes wrong. I thought this was a false flag momentum squeezing, so we squeezed, we go trigger profit takings, but I was expecting this excessive momentum to gather because I thought I saw this level, and this is the level I wanted to play. In here it was trend trading, but it wasn't enough for me. I wanted to buy this excessive area, so I took those trades in an intraday basis. I don't even remember if I did actually. Let me just have a look at the 2-minute short time frame. Just not saying bullshit out there. Yes, I took those trades. Yes, took a trade in here. Obviously, it's one. No, didn't take this one. Yes, I should have, but I didn't. In here was a first buying signal that I just didn't take because no signal. So I said, okay, I'm going to wait for an excess of prices. I'm going to wait for the support in here, 11,355. I was waiting for that level to play its game. We touched the level, triggered the profit-taking signals. So yes, in here is what I wanted. Okay. All right, so in here, this is where I should have got, but the problem is that squeezing momentum has been deciding to release to the downside. The market makers taking everyone down, but it could very well have been going the opposite side. Just what we had in here could very well have played like that. I wouldn't have been surprised to see this, and in that case, obviously, I would have taken a pretty decent gain. That's how it goes. I didn't take stupid risk for no reason. I took risk for a nice gain. Just the market decided to go the opposite side, which will happen from time to time. Technically speaking, we had better odds to retrace and go bullish, but the market chose otherwise. Probably too much buyers with a market-making strategy makes price goes down, and we're buying the losses of those who are buying. That's simple as that. So that's all I had to say for today. So sorry we couldn't make it with an intraday follow-through of the SPX session. I would have liked to do it, but to be honest, I had quite some money in the game in here. I wasn't playing with pennies, and I thought about handling my positions instead of teaching you guys how to handle yours. So sorry about that, but yes, obviously that's a negative day. Not a negative day, or it's too early to say that. We'll see how it goes at 10 p.m. But right now I'm still balancing today. It's kind of a not positive but not negative day, in between. But yes, to me it's a negative day because it should have been a positive one. So facing this, I'm just going to drink a beer, relax myself. This is the last thing I'm doing today, recording that show for you guys, and just moving to something else. So tomorrow is going to be a range bottom strategy buying. I'm waiting for, I'm just going to execute my usual ranging strategy on the 15-minute time frame, which means this signal is absolutely not enough to buy in a range. Okay, so I'm going to wait for something. What we do generally is in 15-minute time frame, I think just sine wave made it wrong. So you try to figure out where the breakout occurs. This is where we got to break down. Okay, so you generally take this, you report this to the downside. So this is where you're searching for. No, sorry, this is where the range. God damn it! This is where the breakdown occurred. Okay, this is where we're accelerating to the downside. So bearish breakdown has been occurring in here. Take the highest candle close. You report it to the downside. So this is where the range fucking bottom is about to be. So no, is supposed to be. Okay, you just never know. But this is where you expect the range to build up. Okay, so this is the big range we're trading. Okay, let's call that neutral range or cycle box. Yeah, it's going to be a cycle zone. So let's do it this way. Okay, consider this to be a big range. So we're into interesting prices. What are the other conditions you need to fill in order to trade a range? You need to trade as close and below to the 76.4% retracement, which is this one. So this is the area you want to buy. You want to buy at the low near a sine wave breakout target, and you want to buy at least in the context channel, at best below when prices break through this trend channel. So you wait for this. Today's box is in here. Obviously tomorrow's box is going to be higher. So tomorrow's box is going to look like that. Okay. So tomorrow below that box, 15-minute signals in the blue area is going to be something I'll catch up with. Okay. So other tips I'm giving you guys. You generally take at least 127 for a stop loss. That's the minimum. So you're taking the range width. Okay, and you're using this extended corrective wave. God damn it, it's supposed to be on the opposite side. So let me just reverse that. All right. So if you want to trade safe, try to catch a trade in that area with a stop loss below 10,000. Below 11,000. That's the minimum, and so you take the position sizing accordingly. Okay, you take a trade in here. It's going to be approximately 1.5% stop loss. So don't use leverage. Have a leverage below 1 and risk 1 or 1.5% at worst case scenario. No more than that. Range trading cannot be more than 1.5% loss, like that. All right. I'm going to leave you guys on that with those tips. So yes, obviously tomorrow I'm probably going to buy the DAX. I'm just going to wait for a signal to play first. So I'm not going to play blindly because I want to come up with my losses, not how it goes. I'm going to make cold-blooded decision all by tomorrow. Obviously not today is not going to be the case. I'm still under influence. So no trading again today. I'm just going to let it go and finish the day the way it is right now. Just going to let it like that. And tomorrow's another day, but I already have built in my strategy for tomorrow. Just waiting for something new to play. So just to digest today, we're probably going to close at the lows. We're not going to offer rebounds. It's not going to be like that. So we're going to gap down tomorrow with the cash. Look at this. This is how it will look like. So, sorry, we're trading 11,200. So we're trading there. So imagine how big of a gap this is. So obviously tomorrow we're gonna range, okay? We're gonna build a bottom range and then we're gonna try to retrace closing that gap. It's a wave one, which means 1-2 gap with an enormous 1% gap to be playing tomorrow, so you can expect the market to close that gap in the next few days. Because we're not making extended waves in here, we're just wrong footing the bulls, but expect some retracement in here. Not going to be a dip retracement, and I think we're going to try closing the gap first. So anytime we go there, it's going to be selling entries, or at least getting the fuck out of this range strategy. All right? So waiting for this. Obviously, it's going to be tomorrow's topic. I just don't know for now what's it going to be. I'm just highlighting the area I want to trade into, and just going to wait for signals to do so. All right. Just looking at this, see if there's anything else I can help you guys with before going out. No. Okay, so I'll leave you guys on that. Watch closely for AUDNZD by tomorrow. I'm not going to buy ahead of the catalyst, even though I think, and I hope it's going to be bullish. I mean, we've had so many bearish catalysts for AUD at some point. I kind of expect some of them to actually fail the consensus. So we'll see if this one's the good one. But obviously, if we're still going to if we keep on going to the downside, at some point, I'm going to have to take a loss in here as well. But no hiding. If I have to take this one, you will obviously know about that. Bye-bye.